Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room, and you're very welcome to join us for what is our trade in the US Open, fully live and interactive here during this session. Just before we begin, for those of you who are genuinely interested in learning how to trade these financial markets, and you can get a good idea from this session in terms of what you can expect, we do look to trade the markets from a position of knowledge and understanding. We want to take on board the fundamentals behind these markets, and then we want to look for those opportunities technically and place those trades, and you'll experience the whole trading journey, so to speak, in terms of how we engage with these markets, and hopefully you'll be able to pick up some good tips along the way. So for more information, you're very welcome to go to our website at thelivetraderoom.com. We offer a vast range of products and services, whether you've only got 15-30 minutes available every day, or whether you actually have time to engage with these markets during the day. So we do cater for all sorts of different types of time commitments, and all at very, very low cost. So do have a look at our website for more details, and feel free to contact us through the website as well if you need. Okay, so let's go through then our high probability trading opportunities for the day, and we shall, before we begin, I suppose, as always, we just start with our risk warning. Please, of course, take on board the risks involved in trading these financial markets. It's from that awareness of risk which allows us to be consistently profitable. So do bear that in mind. So without further ado then, let's start the trading session. We've got the US cash open in about 40 minutes. So we've got plenty of time to kind of get ready for the session. Hello Finbar, good afternoon. How are you doing? Good weekend? It's been nice and sunny anyway, so that's good. Okay, so let me just start by bringing up our Forex factory before we identify the markets that we're looking to trade during the session. We really want to see if there's any major news events that are likely to impact our trading decision making over the course of the session. As you can see from those, from what you can see up screen, today, Monday, the April the 26th, you can see that we don't really have a huge amount to have to deal with. By far the macro events are by far more important. Something to perhaps just be mindful of is the 10-year Treasury note, just to see what that is doing. You can see there's a slight little uptick really from last week's lows. Perhaps best to look at it over the 5-day chart. So okay, it's been largely quite range bound. Last week we did see a very significant low, close to the 1.55% level. Now we're just on the increase slightly, 1.59. So a nice calm, I suppose, backdrop to these financial markets. And in fact, you could argue there's a kind of a lack of, I suppose, fundamental drivers in these markets. So we have to take that into account. Oh, that's a shame. You were working all weekend, Finbar. Yeah, it was a nice old weekend, to be fair. Let's hope it lasts now. Okay, so let's have a look at the opportunities then. We'll assess and see which opportunities are likely to give us the better, the higher quality trades. So we can start by just looking at the euro dollar. So we got this upper trend line really, and it's just coinciding with the monthly high at the 121.11, and prices have kind of bounced off that. So that would have been a fairly decent momentum trade to the upside. What we want to just try and clarify is the equity markets. Are they in kind of a risk on or risk off market condition? And just looking across the US, you can see that it's kind of a mixed bag. We're very close to all-time highs in all three markets. So we would probably go with marginally, yes, we are in this sort of risk on market condition. So we're probably likely to see continuation for the dollar to continue to weaken. So we had seen a little bit of a push to the upside, and that seems to be reversing, as you can see. We'll just move this over here. So we're getting a bit of a reversal signal on this candlestick. So we were really interested this morning to see if we'd get a little bit of a breakout above this level, and we failed to do so. So now we're potentially looking at a bit of a rollover price action, maybe just a short pullback. This is just the 120 level, and we want to be looking for buying opportunities above that level and selling opportunities below it. So actually a bit of a correction off these levels back to the 120 might give us a decent buying opportunity. So
just note, just hearing it again, it's just repeat, JP Morgan is to offer actively managed Bitcoin fund. According to CoinDesk.
Okay, so we get these news updates through our Squawk service. So that's what you'll be able to hear in the background. So we had these markets just bouncing off these highs. We're probably likely to get a little bit of short-term selling creeping in to the euro dollar.
And some Brazil news now. Brazil economists forecast 5.01% 2021 inflation. Prior was 4.92, and 3.6 for 2022 versus 3.6 previously. Brazil economists forecast 3.09% 2021 GDP growth. That's up from 3.04.
Okay, so when we look at the pound dollar, we've got a number of highs just up at these levels, the 140 level. So today we did see actually a decent move higher, which is beginning to kind of roll back over to the downside. We're on the verge of a little structural failure to the downside now. So price has just failed to actually get up. We have kind of a double top here, and then we had a really strong flush to the downside, and that's puts a bit of a question mark in our head. So we get the pullback trade, and now it looks like if we get a close below that, the 138.93 level, then we can expect probably a little bit more dollar strength in this session. The yen had been performing quite well. It's just kind of pulling back a little bit. So it really does look across the board like we're getting a small bit of dollar strength beginning to creep in. You can see that it's quite strong against the Swiss franc now. This is, I suppose, just a strong level of support and resistance in this zone. We're just up and down the whole time. So that's why last week was actually quite a frustrating trading week because we failed to get, I suppose, coherent trading opportunities. The the commodity currencies are performing the best by far. So this is last week's price action, as you can see in the Aussie. We're just drifting inside this zone, and now today we've had this nice little breakout trade. So we shall absolutely be looking at these commodity currencies. So the dollar CAD to the downside will be, in fact, we might just prepare these as we go. So let's put the euro dollar. Just keep an eye on this little reversal signal up at these levels. What I'll do is I'll just get rid of a few of these. So there's your monthly high, and it's just really struggling to break above it. We'll zoom in a little bit more. It's just bouncing off that high, but the commodity currencies we really would be in favor of having a look at. So let's do that as we speak. And we can go, so you can see the continuation trade to the downside. So if we get further moves lower, then that will be certainly a high probability trade to the downside. The Aussie dollar, we'll just bring this up here a little bit. So there's your little breakout trade. As you can see, it's just been drifting sideways for quite some time. The one thing we'd have to be just mindful of with the Aussie dollar is just we had a really strong rejection of that last week. So price pushed up and then fell, really quite dramatically. So we're in this little sideways little zone, pure consolidation. Today we've got the breakout, and now we can look for further buying opportunities if we get that chance now. So I'll go into each of these in just a moment. Very similar type of setup to the New Zealand dollar. So when you have all of these lines just compiling with one another, you can see the build up of these important levels. So we got a few highs and quite a few lows just sitting in here. So we can look for a buying opportunity in the New Zealand dollar. So just proceeding with the rest, you can see that the pound has been strengthening against the euro. We've also seen mild strength against the yen. So the pound is mildly strong without any major influence. So the euro pound the gold market. So just finishing off the yen pairs, the price action is quite sideways moving. It's not the vast majority of trading over the last 2.5 weeks has just been really sideways with strong rejections to the upside and fairly decent rejections to the downside, and we're just in this little type of zone here. So we probably just need to see a little bit more with these yen pairs, and this is the same situation for the euro yen. We do like this market in terms of potential breakout, except you can see we're kind of not in that zone, and we did have a really strong move higher, which completely reversed. So that's what we need to be mindful of again if prices do break up to these levels. But certainly we need to see a little bit more in those. We're getting a little bit of a reversal in today's price action in gold as well. We're not that surprised to get some sort of selling creeping in when prices sort of engage with these levels. Eventually you get some selling creeping in, and that's probably what we can anticipate over the next short term, because a pullback followed by an explosive move above the 1797 would actually constitute, if you can imagine this type of price action where the markets are just likely to sell off, in and around this level of support, and then if you break this little structural high here, then that's your high probability trade further to the upside. So it's actually above that $1,800, a really strong level to keep an eye out for, 1,800 to the upside in gold. But in the meantime, we can expect probably a little pullback. It might give us an opportunity to start buying at the 1758 level. So it's an opportunity, perhaps not for today, but let's see how today's price action plays out. But certainly during the week, we might get a decent opportunity. Another sort of major news event, and it's probably something we should have discussed from the outset, which is some of the news events we have this week. So we've got the BOJ in the early hours of the morning, so just be mindful of that if you're in any yen trades. And on Wednesday, we've got the big one. So we've got two major events. We've got OPEC and JMMC. So we'll see if they will, how the supply-demand dynamic is going to play out on Wednesday, and if any decisions will be made regarding tapering the supply cuts. So we shall obviously wait and see. As a result, we're probably not that interested in getting into oil prior to this event on Wednesday. So, you know, always going into these, you just want to be careful. You either get moves that are in the build up to the event, or you get some sort of sideways, erratic kind of sideways moving price action. So just be mindful of that if you're trading crude oil over the next day or so. So, but the other major news for the week is the FOMC, and we had the BOC last week taper their bond buying program. Will the FOMC do the same? Is it a bit early to do so? These are all the questions that we shall find the answers to pretty shortly, and that's likely to impact as well the sideways moving stock markets, and because they are sort of up close to those highs, but they are pretty much moving sideways. And then on Thursday we've got advanced GDP figures. There are quarterly figures, but it is quite a sizable uptick. And it is on a quarterly basis. So as the economy starts to come back online, we're likely to see an uptick in these types of figures. Okay, sorry, I do digress a little bit. So crude oil, we're not that eager to be getting into crude oil just yet in advance of OPEC on Wednesday. The S&P, this is your sideways moving price action. You can see it across all of these markets. So we will monitor a couple of these. You've got the Dow Jones threatening to push higher, or there's very little price action, as you can see, but there's the threat of it pushing higher. Same for the FTSE. The DAX is literally in this little zone here where you're just most of the move over the last month, if you just take away these three candlesticks, is between the 15,313 and roughly the 15,169. So I mean, you're only talking about kind of 150 points in a market like this, which is absolutely nothing. So really, it's not strange, because we kind of come to expect it really from the DAX, and the FTSE as well. Like, you would anticipate it'll push higher at some point, but just not yet really, by the looks of it. So largely sideways. We'll just be keeping an eye out for the head and shoulders. This is your shoulders, this is your head position, and potentially, you know, will we get that type of price action where you can draw your head and shoulders, and you're looking for the symmetry. That could be quite a bearish little sell trade below the monthly highs, and a breakout to the upside as well, above this little range high here as well. So let's see. So that's the FTSE market. The DAX, it's in that little sideways range, and the Nikkei, it's threatening to push lower, but as you can see, those have a little bit more sort of positivity last few days compared to some of the negativity last week for the Nikkei. Oh, and just Bitcoin as well. It's just had a bit of a resurgence today, so it was looking quite negative last week, with prices just continuing to sort of roll. But you can see that they're largely corrective moves. So it looks like it's a kind of a buy the dip type of policy for Bitcoin, and that's likely to continue. It's just the range of the dips are just really quite volatile. Okay, so we'll keep an eye on the euro dollar. We'll have a look at the commodity currencies, as you can see, and let's have a look at the S&P 500. We'll just stick that up here. We'll see what. Let's look at a market like the Nikkei. So there's three of these markets that we'll be looking carefully at. I'll tell you what I might do. I might just move these around because there's three of these markets. We'll look at the dollar CAD to the downside, the Aussie dollar to the upside, and the New Zealand dollar to the upside as well. And we'll just keep an eye out for the other ones on the daily time frame. Just want to share this kind of price action really, so we can see what's going on with the treble bottoms really down at these lows for the Nikkei. So maybe we can zoom in a little bit more on that, I guess, but you can see that level just sitting in there. Okay, so let's go into our commodity currencies, which are trading against the US dollar. So we do have market conditions which are favorable for dollar weakness, broadly speaking. So let's see where the opportunities lie. So this is a previous day low. We'll take this level in here. Okay, it's largely range bound, but certainly below the 24.48 level. So we'll look for a sell trade below that level. We're only sort of 10 pips lower as we speak. So high probability sell trade. Below 26.21. 24.48 now. 24.48. Because now we're looking for selling opportunities. We'll assess the best opportunity to get into. So what we might get is a bit of sideways moving price action at these lows, and then the breakthrough further to the downside. I suppose the alternative is eventually just getting a little bit of a pullback to a slightly higher level. And if that happens, that's fine. But when it starts to break back below the 24.48, then we can probably look to pull the trigger at that point. Also looking at this low just to see if we get a close below that level. So there's a couple of options really, and just looking across the dollar pairs, it looks like there's a bit of mild strength certainly creeping in against the euro. So so the Aussie next. Let's see what. So there's a lot of resistance up at these highs, a lot of resistance. So these are all your levels of resistance just sitting in here, and we're only just below it. So we can certainly look for some short-term buying opportunities, which is kind of what this trade would represent. Yeah, in the dollar CAD, are we ready for a short? Yeah, pretty much. It's just pulling back now, so we've got the US Open in a little while. So if it can pull back to this level, if we can get a little bit of a short-term pullback, then that will be probably preferable. Or will we just get a little bit of a rollout from here, and in which case we might have to get into this trade a little bit lower. But on the daily time frame, it is now a little bit of a coherent breakout below these lows. The only problem is the number of, I suppose, pullback moves that you get in these markets are a little bit excessive, and there's a lot of buyers coming in at smaller levels. Oh, I see. Sorry, you're in the dollar CAD already. The 24.54. Yeah, good trade. There's your. Yeah, it's just this little breakthrough at this level. So there's your structural failure trade where prices push to the upside, they pull back, they attempt to make a new high, and then you're looking to capitalize on this move to the downside. So really good, and you can probably bring down your stop loss now to above that. I'm not sure where you place your stop loss, but you could certainly take the risk off the table with that one. Good spot on that one, Finbar, and there's your there's a little sort of mini trend within this. So the pullback would probably be the more ideal trade to the downside. But now you're in it, fantastic. You look to stay in it. I'm not sure where you're placing your stop loss, but yeah, it's probably a decent spot now, technically. The 24.71. Yeah, 25.36. You can give it a little bit more room if you. Yeah, 25.32. Yeah, great spot. Like initially, of course. Yeah, maybe it's a bit too soon to sort of get too close to it. So. You'd certainly expect prices to continue lower from here. So hopefully that's going to be a good trade. Just looking at some markets off screen as well, and just a little bit of dollar strength beginning to build up. Yeah, the Aussie dollar, you're thinking of shorting. So so this is what you're shorting. You're shorting, you know, this move to the upside. So you're almost trying to sort of sell the high. So just know that market conditions are, for now, still to the upside. All we're doing is getting a pullback off the highs. So as long as you know that, that's no problem. And I mean, you're right to a certain degree. There's an opportunity to suggest that we've had a few false breakouts of these levels before. Maybe you could identify this one as another one and see prices roll back to the downside. So it really depends how much conviction you have on that trade. Daily range and upper trend line. So just be mindful that we're actually close to a structural failure to trade to the upside. So we've had the first one, which is prices pushing, and then they went sideways for quite some time. And then this candlestick here is really important because that's a bit of a game changer. But then we've gone sideways all last week, and now we're looking to basically push higher again. So that's the market condition in which you're looking to sell. Honestly, right now, and what we want to do is almost certainly when we trade it is to trade what we're seeing, and not what we think is likely to happen. Like, we want to ground our decision making on what's currently happening, and we got a nice strong bullish price action to the upside. If you look at it on the 15-minute, it's just a rollover off the highs. Same situation off the hourly, and for a sell trade, we want to try and have a reason to start selling. At the moment, all the reasons are to buy. But if we had an impulsive move to the upside and we failed to make a new high, and then we saw the prices reversing, then I would absolutely agree with that. So we got this that bit of price action there. So something like that would be a structural failure trade to the downside, just to sort of talk you through it. I know we go through this quite a lot. But at the moment, it's only really just a pullback off the highs. So if you go into a sell trade, be quite aggressive with it. Don't give it time to, if it's drifting sideways for prolonged periods and then you see prices actually starting to roll to the upside, don't expose capital unnecessarily in trades like that. There'll be a lot of traders out there looking for the buy trade. Just they're waiting for, I suppose, the support and resistance, whatever indicators they're using to sort of give them the signal. So it's not quite there yet, but it could be pretty soon. We're running into these levels of potential support.
So as we're moving into 5 minutes until the top of the hour, we will hear from ECB's Panetta. There is a text to be released with a speech titled Spillovers in a Post-Pandemic Low for Long World.
Okay, so you're actually looking for a potential long trade in the Aussie dollar. Yeah, so probably looking for a sell trade below it and looking for potentially a buy trade above it. Upper trend line looking from bottom up. So there's an argument that suggests that if we get a bit of a close, there's a potential buy trade now in the Aussie dollar, and we are 4 minutes away from the open. So this time is 77.79 level. So the New Zealand dollar can be quite straightforward. Or shall I say a little bit more straightforward. A little bit of buying above the weekly high would probably be quite workable. So above the 72.25 would also be a structural failure to the upside. So high probability breakout buy trade. $72.25. $72.25. So just looking at the euro dollar, we're definitely entering a little bit of dollar strength. Is very slowly.
20 seconds from the top of the hour here, and obviously of ECB. ECB Panetta due up at the hour plus. There should be some text released as well, which we'll scan and pass over to you if relevant.
So we'll see what's
5 seconds there.
So we'll see what comes out in the news now shortly. See if there's any kind of reaction. We're looking at the euro dollar to the downside.
Canada consumer confidence flat at 63.5 from a 63.6 prior reading, says Nanos.
Yeah, you're undecided yet. Buy above the 78.50 level.
Just refreshing the ECB webpage to see as and when text drops.
Yeah, the do you mean the 78.15 level? 78.15. Yeah, so the out and out sort of structural high is just up here. You're absolutely right. So you're getting prices that are potentially failing to the downside. So you'd expect price to push up to the 80 level. So a decent potential trade above that 78.53. So you're spot on. It's just we might be able to get into that trade just a little bit earlier. You know, we drifted sideways, we pushed higher, we've drifted sideways, and now we're looking for that next leg to the upside. So hopefully you can identify.
And comments there from the new German CDU leader Laschet. Says must generate tax revenues via growth, not higher taxes.
Must generate revenue via growth. That's interesting coming from the Germans, who imposed austerity across Europe 12 years ago. So all we're really doing is, I mean, this is, I suppose, what technical analysts do. They look at charts and they look at price action which has come before, and they suggest solutions to what's likely to happen next. And so you see, we wouldn't be looking for necessarily a sell trade. Now, if you went back here and prices pushed back, and you're looking at this candlestick, and you can see that, you know, this is a level of resistance, and prices, you know, began to break to the downside, then, you know, trading the price action, that's more of a tradable sell opportunity. But selling the highs up here wouldn't be a sort of a viable trade for us to do, as I'm sure you know. So, but we are just breaking out. We're actually closing at the moment above the 77.64, so we can expect further upside. And all we're really doing now is just getting a little bit of a pullback to previous highs. See, again, from a currency perspective, what we want to be able to do when we trade is to trade strength versus weakness. We're getting the CAD breaking lower. So we might be able to get into that opportunity. Just want to have a look at here at the So this might give us the best opportunity. We're probably not going to get into all three. So the Aussie or the CAD are probably the two best opportunities. and we're just getting that little break to the downside. You see, we broke to the downside previously and reversed, and now if we close and let's see if we get that little break lower, then that's our opportunity to the downside. So we're looking at getting in around the 124. So there's our close. We've got the US Open, which has just kicked in. Right. Okay, so we're getting into this this CAD trade. So okay, so let's get into this this dollar CAD trade. We're just getting that little breakout to the downside at the beginning of the US Open. You'll see the trade up on screen now in just a few seconds. $24.75. Let me see if you can see the yeah, you should. So we zoom out a little bit.
We got some Moody's commentary on China here. It says China's conservative growth target of above 6% in 2021 will limit pressure on regional and local governments to stimulate growth.
Okay, so there's our entry, there's our stop loss, and this is a trade that we'd be looking to sell this market all the way down to potentially, oh, let me see. Right, we can certainly expect it down to the 123.62 level.
More from Moody's, it says the shift toward structural issues outlined in China's 5-year plan supports sovereign credit quality, although fiscal pressures may rise.
So we've got about a 40 pip risk on this trade with further downside. Beyond that level is an interesting one. So we've got this level down here, the 123.
On the banking side of things, it says Moody's says it's changed to stable from negative the outlook in China's banking system, underpinned by broadening economic recovery, central banks' neutral policy stance.
You know, you got these 2 monthly lows back down at the 122.59, so that's the next leg if we get some further continuation. And in terms of momentum, it's clearly to the downside. So you do have the backing of those that are in control of this market, which are your sellers. So I suppose it's not a challenging trade to get into. It is erratic, and we had been in this over the last week or two as well to the downside, but we just got sort of taken out with lots of erratic price action, really, which is a bit of a shame. But that's often what you can expect from the dollar CAD. So it can really behave like that on occasion. So there's our entry, there's our stop loss, and we've got that little move beginning to kick in on the US Open. Our sell trade is below the 124.48, just below this little low here, getting into it a little bit lower than ideal, really, but we've got quite a strong technical stop loss just above this little handle in here. So and we're looking to get into this on a swing basis to the downside, so we'll be maybe in it for a day or two, maybe 3. We'll see how it plays out. And once it gets down to those lower levels, we can, or even if we just get a further breakout today, we can certainly look to mitigate risk on this trade relatively quickly. So the other one is the Aussie dollar. We do like the commodity currencies. We're perhaps not going to load up to any great extent. We've got the dollar beginning to strengthen a little bit against the euro, so we do have this conflicting sort of dollar strength story. The S&P is doing absolutely nothing, and the Nikkei is kind of reversed off its lows. So the indices markets are really not doing an awful lot as things currently stand. So the moves are largely in the commodity space, really, against the Canadian dollar, the Aussie, and the New Zealand potentially. So the New Zealand above that 72.25 level, as you can see up on screen. Now there's a technical opportunity here right now in the Aussie dollar to the upside. We were discussing it a little bit more in more detail earlier. So this is the momentum, this is the direction in which we're looking to trade it. It's to the upside. We have a new high up here, so we keep creating these highs where markets pull back to, and then we get the extended move to the upside. So this is potentially the start of the next one. So we'll see how we get on with that. Hello, David. Good afternoon. Yeah, look, I understand your dilemma. You have a huge problems finding support and resistance. Yeah, you wouldn't be alone, absolutely. But what we do is we take a lot of that information from the daily time frame. So what we can identify is there's lots of daily highs just sitting around this little zone, and same to the downside, just inside that little box. So again, we spoke about it, I think it was beginning of last week, where this price was breaking to the upside, and there was absolutely a buy trade. It just turned out into a false breakout to the upside, and it reversed, pretty sharply. So that can also happen in this trade, which is another reason to be a little bit cautious on it. But you don't have to be too precise with these levels. You can just say roughly above the 77.64, we're looking for a buying opportunity in this market, knowing that we've had a couple of rejections just above it. So that's the risk you take with the trade. But commodities are increasing in price. It's likely to be supportive of your commodity currencies. The dollar has been largely weaker. The equity markets are close to all-time highs. So the conditions are okay for the Aussie dollar to push higher, for the CAD to push lower, dollar CAD, and the New Zealand dollar to push higher. So you've got the context for the trade, and that's fine. We know which markets we're looking at. We know what direction we're looking to trade them. And now it shifts to a technical decision. So this is where your support and resistance levels come in. So what we'll do is we look for a buying opportunity on the daily time frame above 77.64. I hope we both agree on that. So then what we can do is we can go and have a look at the smaller time frame. So let's start with an hourly time frame. It might give us a little bit more clarity. So that's the 77.64 level. So this is where the market had been moving sideways. And all we're really trying to do with support and resistance is identify levels where the market respects on numerous occasions. Same to the downside. And these levels, they don't have to be exact. You got to give them a bit of space, because there is so many. These markets are traded with such volume. You can get a 10 pip slip either direction. So this market keeps rejecting these highs on numerous occasions and roll to the downside. Same, to the upside. And even this here is technically it's within this level of, it's just a strong level of resistance. So yeah, zooming out really helps, so you can see these levels clearly, and then you can make a decision to trade the breakout. So and that really fits in with our analysis on the daily time frame. So your high probability trade is exactly that, above the 77.64. You can look at it on an hourly time frame, and you can see that 77.64 is a strong level, and you're looking for a market to respect it on multiple occasions. So this market has been trending sideways between 77.64 and 77.05 for quite some time. The 14th of April to 26th, 12 days. Okay, they're calendar days, but how many sort of trading days that is? 10 or so trade, or 8 or 9 or whatever it is. So we can just identify the opportunity, and then of course it pulls back to that level. So if you're asking me, what are the levels of support and resistance in the New Zealand, in the Aussie dollar? They are precisely the 77.05 to the downside, the 77.64 to the upside, and you have a higher high above the 78.16. These are the levels of support and resistance that I would be concerned with. So focusing in too hard, because the lower time frame you go, David, the more difficult it is to genuinely see the true levels of support and resistance. So if I take this into a 1 minute time frame, you're going to probably come up with all sorts of different levels of support and resistance. 77.64. So use a bit of perspective. It's called multi-time frame analysis. That's what we go through and we kind of teach our traders, is that you can have a view on the bigger time frames, for example, the daily time frames.
So
and
we're
you
moving
can
into 10 minutes now until the bottom of the hour. We get US durable goods for March. For durable goods, we're looking for it to increase to 2.3% on the prior negative 1.2%. The range negative 1.5 to positive 4.3%. With X transport, we're looking for 1.6 on the prior negative 0.9%. The range 0.6 to 3%. Durables X defense month on month, a prior of negative 0.8%. With the non-defense cap X air, looking for an estimate of 1.5 on a prime negative 0.9%.
So does that make a little bit of sense? Work with
So
the bigger time frames if you can. They're more important.
They say with
So I'll take that off. They are far more important. Okay, sorry, do bear with me just a moment. Sorry, I'll just come back to that in just a moment there, David, if that's okay. So I'll switch this to the dollar CAD trade. See, last week we were already trying to sell this at the 124.82, so up at these higher levels. So sometimes it's the right trade, but it's kind of the wrong timing, and there was a lot of sort of volatility in the dollar CAD, specifically in the dollar CAD. So So this is our second attempt at this sell trade. Okay, so apologies for that. So dollar CAD, we're in this trade to the downside. We can still see this dollar just strengthening against the euro. So there's, I mean, this is really, I suppose, why we're not going all in on the dollar weakness against the CAD and the Aussie and the New Zealand. We're just going to try to cherry pick. If we get into a situation where we can take risk off the table for the dollar CAD, then we'll add the Aussie dollar, and same situation. We'll then look to add the New Zealand dollar maybe above that level. So there is sort of mild S&P strength. It's very, very mild. It's not really moving. In fact, the range in this market is difference between high to low is only 12 points, which is negligible for a day's trading. So that's the context of these trades, which is so what I want to do is just put in an average true range. So if we look at a 20 period average true range currently up on screen. So at the bottom, what you can see is the amount of volatility in this market has been dropping like a stone pretty much. So if we go back to this time last month, the volatility was really quite high, around 73 points per day over a 20-day period. That's the average range over 20 days at this point was 73 points. And now over the course of a day, it's roughly 37. So you can see it's pretty much halved in the space of 4 weeks. So when you talk about volatility in these markets, and this is why it effectively becomes untradeable for us, because we're not seeing the volatility and the direction, and the things we look for is price and movement, and we're not getting neither. So it's quite difficult for us to pull the trigger on a market like this. But this ebbs and flows. This goes up and down an awful lot. But certainly the volatility and the range in this is really awful. It's very, very poor. So let's look at it over a much bigger time frame, and you get a sense for sort of historical levels of volatility in this over the last, let's say, couple of years. We had little peaks, but broadly speaking, we're down at these, significant lows now. So what does that tell us about these markets? It gives us some really useful information. It shows that the appetite for buying markets like these, which are the biggest in the world, is diminishing ever so slightly. There's not the excitement or the volatility in the price action to encourage people to be jumping in at these highs. So what that can often lead to, certainly in other markets, the US indices markets are a slightly different breed because of the fundamentals, but normally in other markets you look for exhaustion, you look for I suppose price action like this for markets to actually just roll lower. So if that's and if we get some negative news driving indice markets lower, so for example let's say we wake up and there's a massive spike in the US Treasury notes, to the upside, if we break the 175 in a very, very short period of time, this will become a really strong high probability sell trade. It really will. So it's worth keeping our options open, really mentally more than anything. So really for us, we'll buy this market above the 41.93 and we'll sell it potentially below the 41.20. So I suppose we don't mind whether it goes higher, whether it goes lower, but we can certainly prepare for quite an explosive move to the downside if we do get that opportunity. So we can just sort of sum up really the indice markets. There's a lack of volatility. There's no major direction, and that's likely to hamper potentially these trades. But then if prices push higher, perhaps 10, 12 points more from the current levels, then we're at all-time highs again, and we're suddenly risk on, which would be supportive of our trades. So we're looking to get into the dollar CAD maybe over the course of the next few days. So we'll we'll let this price action just play itself out, and see if we can capitalize on the momentum trade to the downside, which is what the trade is. And we keep an eye on the Aussie dollar and the New Zealand dollar. And we've also got between now and Wednesday, before the FOMC, with the dollar CAD, so that will help as well. Yeah, so David, I'm sorry guys, I'm just conscious of the time. We'll pack it up there. Those are the trades that we'll be looking at for the session. We'll be posting those. We'll be posting any trades or any further trades that we're getting into through our Signal service as well. Yeah, just going back to support and resistance. I mean, certainly a lot of traders, when they're starting out, they want to be really accurate with support and resistance, and I know it doesn't really help too much, but you almost want to take a bit of a snapshot view. You want to be able to look at a chart, look away and go, oh, I can visually understand where that level of support resistance is. And you're quite right not to zoom in so tight that you lose the perspective. So you don't want to work too hard with identifying support and resistance. And if you are working hard to work it out, then you're quite right. You've probably zoomed in too much, so it's really difficult to see it. So zoom out for sure. Look at the hourly time frames, and don't work too hard to find it, because that would imply that it's not a strong level of support and resistance. And you're really looking for the strong levels of support and resistance, and try to pinpoint those if you can. Lots of traders use a whole range of different indicators to kind of help with the identification of a breakout, or when a market is overbought or oversold, or whether it's a level of a Fibonacci retracement or whatever the case may be. But they're all levels of support and resistance, and being able to identify where prices congregate to the upside and to the downside is actually, it's a really useful skill to know if you're trading markets. So yeah, do all of the above. I would agree. Yeah, and if you've got too much lines on your markets, you see, I do forget as well, when we run these sessions, is that we might have an awful lot of lines on the markets, and the thing is, these are intraday levels, so they're not of any major importance to today's trading. So we can certainly get rid of a number of them anyway. So you're really looking for what we have in markets like this is we have the monthly high, which is the green line. We have the monthly low, which is the red line, which is the monthly low, and we have lots of intraday levels that we can just track and monitor. But the point is, we can take off the vast majority of these lines, because if you can't see what price is doing, then it's hampering you. It's not helping you. So it's very important you do see, and it does get a lot easier. The more you're looking at these charts, the more they actually start talking to you. So I don't want to confuse you with the number of lines on the charts, because you can actually take away most of them. So for the dollar CAD, we're interested in these types of levels, these little highs and lows in these markets, and we're looking to trade them accordingly. So okay, this is a 15-minute time frame, but again, you've got these levels up here. So these are all your swing high and swing low levels on a smaller time frame, and you can do the same on the hourly. Some of these 15-minute levels are far more important than others. You can see that the 2507 is a really important level of resistance. You can see this level down here, the 124.71, is a really important level of support. So you can see how the market behaves around that level on numerous occasions. Now we're below that level, we want to be selling. So potentially there's an argument for a buy trade below it, but certainly a buy trade above it and a sell trade below it. and that's what we want to do. We want to kind of talk ourselves through these markets and sort of educate ourselves in terms of reinforcing, what the right thing to do is, and what we try to do. And we talk about consistency all the time is not sell below. Not to sell these markets. Not to buy below levels of resistance and not sell below levels of support, above levels of support. So what we're saying is we want to stay on side with that decision making, if that does make some sense to you. So look, I do apologize, guys, we need to shoot off, but if there's any further questions, feel free to give us get in touch with us perhaps if you need, and there's more information as well on our website. So we'll pack it up here. We've got our dollar CAD sell trade. We've got potentially a buy trade in the Aussie dollar. It looks like we might be getting a bit of an uptick. Same with the New Zealand, above the 72.25, decent buy trade there. We're really not far away from all-time highs in the equity markets. Maybe post European close, we get some strange moves at strange times. So maybe there's still significant upside left in these indice markets, and we're only sort of 10-12 points away from all-time highs. So that would certainly help our dollar CAD trade. Okay, so listen, on that note, guys, thank you very much for joining us. We'll see how we get on with these opportunities. And of course, if we get into any trades, we'll post them through our Signal service. So thank you for joining us. We'll be back again tomorrow at 12 noon. So if you can join us, that would be great. Give us a thumbs up and subscribe to our channel. We've been working a lot in the background. We've got a lot of quite interesting content, which will be coming online soon. So you'll be notified of that, and you'll be notified as well when we go live every day. So we'll hopefully see you again tomorrow at 12 noon. From everyone here at the Live Trade Room, take care. We'll speak to you soon. Bye for now.